Alright guys, welcome to this video where we're going to be talking about the trade of the week, how we took the trade, and I'm going to show you exactly how we did everything. Okay, so it's Gbpusd trade of the week. This is passed already, but I just wanted to show the whole team exactly how we took the trade. Some people are wondering, okay, we just call that a trade, but you know, I still got to give you exactly the steps that we used and a whole confirmation list. Alright, okay, so let's jump right into the details right now. Gbpusd has been very bearish, all in all. So basically we're going to start from the weekly time frame, just do a top-down analysis briefly before we go into the very minute detail on how we took the sell trade. Okay, so guys, you can see that on the weekly time frame we're still bearish. GBP has obviously been going down, but you see I don't usually do my markups on the weekly time frame. I just look at it with the naked eyes and just know that okay, it's creating a series of lower lows and lower highs, and that simply tells us that we're still in a very bearish market. Okay, and then so we go to the daily time frame, and from the daily time frame that's where we actually mark up our levels. Okay, so something very interesting happened here. If you look from this daily time frame, we've been having this series of high, and lower low, lower high, lower lows, which indicates that the market is going down. But at this point we had this very strong looking support. Okay, so price came here at this point and rejected, and also came back down here, rejected, came here again and rejected. So we have this three very solid point. And remember, this is a daily time frame, so when you see a support like this, it's telling you that okay, this is actually a very strong support. But then we had this BOS here, this break of structure. Price broke it very smoothly and very cleanly. Okay, and now since I saw this, we started tracking the retracement, because we know that okay, obviously we're still going to sell because we're still in the bearish market. So we started waiting for this retracement, and then the most likely place a smart money trader will look at taking an entry is around this region. This is daily time frame. Remember, we have this very sweet institutional candle sitting just here, this buy and sell. Okay, so price started going back up gradually, which I actually like. When I'm seeing a retracement, I like to see price go back slowly, not abruptly, not fast. When it goes back slowly like that, it gives me a stronger affirmation that okay, it's actually a retracement and not a change in trend. Okay, so with this, okay, let's go down to the 4 hours and break down how we enter the trade. All right, so before we get to the 4-hour time frame, let me show you something on a daily. I marked up this level on the daily, this particular level, and then I drew this line. I put this line right here. So this is the open of the candle, of this daily bullish candle right here, and the wick. So within the open and the wick of the candle is where I drew this rectangle, this blue rectangle, and I put this line right there. Now price will definitely react when it gets to the open of that candle. If this place is not supposed to hold as the last point of support or resistance before the market drops, we're probably going to blast it like we just did here, but it's still going to drop and give us some pips. And this is Gbpusd, guys. It's volatile, so a little bit of movement in it can drop a lot of pips. Okay, so that's the reason why I had this place marked up like this. All right, so let's go down to the 4 hours and see what it shows clearer. Okay, now my network is messing up. Come on. All right, 4-hour time frame. All right, so this is where we actually placed that rectangle and that line on the tip, or should I say the open of the daily time frame, the daily IT block. which is on the neckline of this M pattern. If you can see this is a very clean M pattern. Yep. And most times when we have an M pattern like this, the retracement comes on the neckline of the M pattern, which is also in line with the open of the daily candle that we placed, right? And now within this side, we're seeing another sweet looking institutional candle. My God, this is really looking good. But we're going to work with this position right now. Okay, so I marked up this place and I was waiting for price to get to this particular level before I make my move. And then price kept coming gradually, and like I said, when you see a sharp move like this, you want to see the retracement coming back gradually, slowly, not the way this price was moving. This is an impulsive move. This is a correction move. Okay, and then when price started getting to this level, price started slowing down, started accumulating at this point, which shows it's trying to respect this neckline and it's trying to respect the tip, which is the open of that daily candle. Okay, but still 4 hours is not the time frame I actually use in entering trades. I use anything from 1 hour, 30 minutes and 15 minutes. But in this particular situation, let's see what the 1 hour holds. Now, market closed on a Friday, somewhere around here, and then when the market opened in the morning, Sunday night, yeah, we had this high before the close of the market. Created, this was the last high the market created before the close, right here, this particular high. And then the next day, during the Asian session when the market opened, we created another high. Now you could see these 2 points, which indicates which looks like a double top, which actually is a double top, and most retail traders will trade this as a double top. If you go to a lower time frame like 15 minutes, 5 minutes, you're going to see a very clear candles printed on this whole spots here, which looks exactly like a double top. And then with this kind of rejection, okay, with this kind of rejection, and you see a doji candle like this and another sell candle printed like this, so many people will start selling, so many traders will start selling at this point and probably put their stop loss above this high right here. And so many other people might have buy stop limits right here. And when I saw this happen, I knew this was a trade because number one, like I said, this rectangle that we have here, remember, is our daily point of interest. That is where we place the point of interest. That is where we want to see the market reacting to give us the opportunity to sell, right? So as a smart money trader, I saw this double top right here, which indicates sign of liquidity. So there's a lot of stop losses right here, there's a lot of buy stop orders right here, so there's a lot of money right here. And what are these institutions going to want to do? They are going to try to take out all of those liquidity and get into more positions for themselves. So at around 7 o'clock, 6 o'clock, all of this was forming 7 o'clock in the morning, and that is the London session open. About the time when the London session was about to open, this move happened. So immediately I saw this move happening, I took my sell right from here when this rejection started. Okay, I took my sell right from there. Let me open the session so we could see it better. So from the sessions, you could see that this was still the new Asian session forming, and this candle actually was formed during the Asian session, and this other candle around 8 o'clock was formed between this Asian session overlap and the opening of the London session. So this candle occurred or was printed during the overlap, right? So immediately this candle sprung up, was printing, and I started seeing the rejection. Remember, it's still on the area of interest. This is the whole area of interest where we're trying to sell, and then we see this liquidity right here. So this candle definitely is printing to take out this liquidity, because if you back test this, go back and check, you would notice that GBP pairs usually do this, especially GBP/USD. They create liquidity during the Asian session, then at this Asian to the London overlap, they run that liquidity and take the market to the opposite direction, or in the actual direction where they want to take the market to. So this is exactly what they did here. And remember, this is on a very strong solid area of interest, a daily point. Okay, so when they ran this, I got in at this point, and then this candle was printed, which even gave me more confirmation. Although this was where I sent the signal to the team right around here, so they got their entries from this retest right here, this very immediate retest, and this market started pumping and dropping some pips. All right, so let's see. I got in right around here. This whole move was about 50 pips, which I took my first TP right around here. After this, I saw this candle, so I took my first TP here. Then I got in again around this region. Now, the reason why I got in here again is because definitely after we have this move, this retest here is like a partial profit they take. Okay, it's not the main retest, and then you see the candles come back and print another one for the better retest here, re-entry. Okay, so this was where most of the team got their re-entries, those who missed the first entry. Okay, so we got the entry right here, and then we drove this down almost 60 or 70 pips, right around here, 70 pips. Some got almost 80 pips. So let's change, take this out, yeah, and bring this down. Now the TP was set at this point. When market started pumping down, it created a lot of these rejections around here, and market started going back up. But then we saw this here, it created another point of liquidity around here, another area of liquidity, and market drove down to take out the liquidity to mitigate this particular sell to buy candle. So that's where I had my second TP, and that's how we took profit from this particular trade. So I actually generated almost about 80 pips roughly on this particular trade. And so that's how we took the trade of the week. This is definitely the only trade I took for the week, and it was more than enough because I hit my weekly target already with this particular trade. So patience is actually key. You wait for the right setup. Always be patient, and it's always going to be rewarding when you're patient. It took a lot to learn how to be patient in this business, guys. So this is the trade of the week. This is a beautiful setup that we took, though we're still looking at GBP for some more sells, but in a better position. So this is what we're looking at next, and price is already getting to that angle, so we're going to see what happens next, and we're going to post another some trade of the week. And hopefully, guys, we're going to be dropping videos on my particular step-by-step setup, and also my confirmation checklist, how I take my trades, and all the confirmations that I use before taking my trades. Thank you, guys. Peace.